Hi, let me introduce our young professional. My name is Penki Bintahang, alongside with my colleagues Putri Alyufanita, Nur Hanina Shahida, Abdullah Shakur, Siti Nur Izzah, Maisarah, and Sonia Lungan Laing. Hi, Assalamualaikum. Today, we will briefly discuss Malaysia's taxation system and its relation to zakat planning under the Income Tax Act 1967. Managing money in Malaysia is not just about earning and spending, it is also about planning for tax and zakat. Tax is a legal responsibility for everyone, while zakat is a religious obligation for Muslims. For Muslim individual, good financial planning means balancing both. In Section 3 and Section 4, different types of income like salary, business profits, or investments are treated differently for tax purposes, and each has its own zakat consideration. That's why tax planning is very important. The tax system is progressive, ranging from 0% to 30%, with Section 46 offering deductions to reduce taxable income and tax liability. In this report, we will be exploring a case study of a fictional Malaysians showing how smart tax planning under the Income Tax Act 1967 can go hand in hand with fulfilling zakat obligation. The aim is to minimize tax, ensuring zakat compliances, and ultimately strengthen overall financial well-being. Let's go over the case background of Encik Azlan bin Hashim. Encik Azlan is 40 years old, a senior account manager in Subang Jaya, married to Puan Siti with three children. He is a primary financial provider for his family and also supports his parents' medical expenses. His income includes a salary, bonus, travel allowance, and taxable benefit in kind like gardener and a servant. He also runs a part-time business named Aza Outfit Store, owns rental property, earning income from legal bursa investments, and have saving as well as gold. Encik Azlan contributes to EPF and SOXO and participates in PRS, which is voluntary retirement scheme. Also, income tax is deducted every month in his payslip. He also receives tax relief for family and personal expenses. As a Muslim, he pays zakat fitrah and zakat on his wealth, including his income, saving, gold, and investments that complies with Lembaga Zakat Selangor requirements. We will be diving more the details in case analysis.
In this section, I will present the case analysis for our case study, which focus on the income sources of Encik Azlan bin Hashim for the year of assessment 2024 and how these income are treated for tax and zakat purpose. Encik Azlan have five main sources of income, namely employment income, business income, rental income, dividend income, and interest income. First, employment income is his largest income sources. Encik Azlan earned an annual salary of 240,000 ringgit, a performance bonus of 20,000 and travelling allowance of 5,000. In addition, he received benefit in kind including a gardener and servant value of 4,800 ringgit annually. He is also provided with accommodation which is taxable under Section 30/1C of the Income Tax Act 1967 and calculated of 30% of his employment income, amounted to 79,500. Altogether, his gross employment income total 349,300 ringgit. Second, business income come from his part-time online clothing business, AZA Outfit Store. The business generated 61,000 in gross income after deducting allowable expenses such as inventory costs, marketing, operational expenses, platform fees, and capital allowance. The net business income is 23,000 ringgit. Third is Encik Azlan earned rental income of 30,000 per year from a residential property. After deducting allowable expenses, including assessment, tax, quick rent, and loan interest, his net rental income is RM12,600. Next is dividend income of 6,000 is received from Malaysian companies. This income is tax exempted under Section 44/1 of the Income Tax Act 1967 and is therefore excluded from chargeable income. Lastly, Encik Azlan earned interest income of RM2,000 from saving and fixed deposit, which is taxable under Section 4F.
Today I will briefly explain the strategic financial and tax planning approach for Encik Azlan. First, under income tax filing and optimization, Encik Azlan income comes from employment, business, rental and interest sources, totaling RM396,900. By applying eligible tax relief such as EPF, medical and lifestyle expenses amounting to RM43,597. His chargeable income is reduced to RM353,303. In addition, Zakat paid of RM11,160.25 is used as direct tax rebate, lowering the final tax payable to RM26,925.35. Second, regarding investment tax implications, priority is given to tax-efficient investments. Dividend income remain tax-exempt under Section 44(1), while interest income is fully taxable under Section 4F, highlighting the importance of balancing taxable and tax-free instruments. Third, for retirement and estate planning, private retirement schemes are utilized to build long-term retirement saving while providing annual tax deductions. Zakat al-Mal on savings and investment further support both religious obligations and tax efficiency. Finally, under capital gain and property management, rental income is optimized through deductible expenses, while asset growth is monitored to support long-term wealth and succession planning. Thank you.
Today I will explain the zakat planning for Encik Azlan case. Firstly, zakat is compulsory for Muslim who wealth exceed the nisab. It helps to purify the wealth and promote social and economic justice. For Encik Azlan, proper zakat planning ensure Shariah compliance, efficient financial management, and eligibility for income tax rebates when payments are made through approved zakat institutions. Next, we look at Encik Azlan zakatable income and assets. He has several sources. These include employment income such as salary and bonuses, savings and cash in bank accounts, investment gold above the nisab, and Shariah compliant investment such as ISB. All these assets meet the conditions of nisab and hold. Therefore, zakat is applicable. In terms of zakat planning strategies, all zakatable income and assets are identified clearly, and zakat is calculated based on net income. This applicable zakat rate is 2.5%. Encik Azlan may choose to pay zakat monthly or annually to manage cash flow better. Importantly, zakat is paid through approved institution to ensure proper distribution and tax rebate eligibility. Finally, for the zakat calculation summary, zakat on employment income is RM7,236, saving and cash RM1,125, gold RM641, and investment RM2,115. This brings the total zakat payable by Encik Azlan is RM11,116. Proper zakat planning helps Encik Azlan fulfill his religious obligation while managing his financial responsibility and contributing to society.
On this slide, I will explain about the tax computation for Encik Azlan for the year of assessment 2024. Encik Azlan earned income from several sources, namely employment, rental, business and interest. When all these income are combined and capital allowance is deducted, his total assessable income amounts to RM396,900. As we can see, employment income is the main contributor to his overall income. Next, Encik Azlan is eligible to claim various tax relief. These include individual relief, contribution to EPF and SOCSO, PRS, relief for unmarried children, medical and dental expenses, education and lifestyle expenses, fertility treatment, as well as life and medical insurance. Altogether, the total relief claim come to RM43,597. After deducting this relief from the assessable income, Encik Azlan's chargeable income is reduced to RM353,303. This is the amount that is subject to income tax. Income tax is then calculated based on the resident individual tax rate. The first RM100,000 is taxed at a lower rate, while the remaining balance is taxed as 25%. As a result, the total income tax amount to RM72,725.75. Encik Azlan also benefits from zakat rebates as he has paid zakat al-fitr and zakat on wealth. The total zakat rebate is RM11,188.75, which directly reduced the tax payable to RM61,537. Finally, after taking into account the tax already deducted during the year through monthly tax deductions or PCB amounting to RM41,150.40, Encik Azlan still needs to pay an additional RM20,386.60. In conclusion, although tax relief and zakat significantly reduce Encik Azlan's tax liability, there is still a balance of tax payable for the year. I think that's all from me. Thank you.
Hello, Putri here. On to analysis and recommendation. So good financial planning isn't about taxes. It's also about doing good. So take Encik Azlan, a senior econ manager in Malaysia. His total income for 2024 is RM396,900 Malaysia from salary, business, rental, dividends and interest. After deduction like EPF, medical and lifestyle relief, his chargeable income is RM353,303 with tax of RM72,725. Now here's on the fun part, zakat. At 2.5% of his zakatable income, that is RM11,116, paying zakat not only fulfill his religious duty but also lower taxable income. Smart, right? To stay on track, Azlan can automate his zakat payment, time them during Ramadan for extra blessings, and maximize tax relief like PRS contributions and medical expenses. For investments, focusing on Sharia compliant options like dividends or unit trust keeps his wealth halal and efficient. By planning taxes and zakat together, Azlan grows his wealth responsibly, fulfill his spiritual duties, and helps the community. A win-win for money and soul.
In conclusion, tax and zakat can be planned together to reduce tax while still fulfilling religious duties. With proper planning, individuals can enjoy two benefits, both better financial management and spiritual satisfaction. By choosing the right timing and using available tax reliefs, taxes can be reduced and long-term savings can be increased. At the same time, zakat is paid correctly and responsibly. A balanced distribution of zakat helps support both local communities and people in need globally. When zakat is managed in a sustainable way, it creates long-term benefits through education and empowerment. Overall, smart tax and zakat planning helps individuals manage their wealth wisely while contributing to a better and more caring society. And with that, we conclude our presentation. Thank you for listening.